India's power sector is entering its biggest capex cycle ever, and there's one stock that literally finances all of it. Let's talk about Power Finance Corporation. PFC is India's nodal power sector NBFC. It lends to generation, transmission, and distribution projects and earns through net interest income. Think of it as a banker to India's entire power infrastructure. Now, here's the FA trigger that you cannot ignore right now. So, the Union Budget 2026 announced the merger of PFC and REC, two government power finances combining into one giant entity with a loan book of over 12 lakh crores. This merger is expected to eliminate the holding company discount and significantly re-rate PFC stock. Financially, the company is firing on all cylinders. Quarter 3 financial year 2026 standalone profit up by 15%, loan book growing 13% year on year. The gross GNPA improved to just 1.64%, and the renewable energy book growing at 28%. The stock will trades at 0.85x book, deeply undervalued. Dividend yield is 3.4%. You can see that the revenue and the net profit financial years has been growing. So, what is the risk involved? Discom exposure and some forex losses on euro borrowing. It is manageable but not structural. So, the FA verdict is that there is yield plus growth in PSUs with a powerful re-rating catalyst already in motion. Look at the technical analysis. You look at the multi time frame. So on the monthly chart, we can see that PFC ran historically from a price of 20 to 580 and then came back to 44% to 330. So there was a major correction in this particular stock. That correction is done. The stock is now reclaiming the levels of 460 to 480. The original breakout phase from the period of 2023, that breakout phase is reaching back to that level. Monthly support is rock solid at the rate of 380 around this particular region, and to 400. So that is a monthly support. And then you look at the weekly chart, weekly chart after 7 months of downtrend, that you can see the stock is making higher highs and higher lows since the period of January 2026, as you can see in this particular period. And the textbook weekly trend reversal, volume expanding on the green candle. The weekly resistance is around at a region of 480 to 500. It's the same region as the monthly chart. Now, when you look at the daily chart of the company, PFC consolidated between 390 and 430 for the past 6 weeks in this particular region, and then broke out sharply in the period of April 2026 with a strong volume. As you can see, the volume bar is also up. The breakout level of 440 to 445 is now acting as the support for the current price. The classic breakout retest zone, and the RSI for the stock stands at 72.8. Yes, technically overbought, but in a strong trending stock coming out of a prolonged correction. RSI above 70 signals momentum, not exit. I will watch for divergence or daily close below 440 to reassess. So now I will be setting up the GTT based on this logic. So I will be buying the stock at a price of 445. The breakout support on the daily. So 445 would be my target price. I will increase the lot size. Created a by GTT. Now I'll be creating a OCO to set the target price and the stop loss. So the stop loss would be around 425. The below structure, no guesswork, it is below the support level. So 425 is the stop loss, and the target price would be 485, just below the monthly resistance wall. So I have created a OCO with the target price and stop loss. So not have to sit at the screen and stare at it. There is no panic, no greed, just a plan executed with discipline. So fundamentally, this company might be re-rated technical analysis waits for the pullback and the GTT does the rest. So I suggest that please do your own research and decide. If this was useful, like and subscribe. Drop your PFC target in the comments. See you on the next one. Thank you.